Joining us now to talk about the tournament and to give us his outlook on markets is American Century Investments CEO Jonathan Thomas, along with CNBC senior markets correspondent Dominic Chu. Dom.
Thank you very much, Morgan. Jonathan, first of all, thank you so much for hosting us out here. It's a real pleasure to have you here with us.
Thank you. Your whole network, NBC, you guys do an amazing job. This event has turned into a world-class event because of the network.
All right, so let's talk a little bit about the event itself. This is a storied event. The number of celebrities I've spoken to over the course of the last 24 hours, they love coming here. Why do you do this tournament, and why have you been doing it for so long?
So it's the 35th year. We've been the sponsor now for 26 of those, and it is the perfect platform to tell our story. When we look at the demographics of the viewers, this, and of course what's happened over the 20 years, some years we've done this, golf has grown in popularity, celebrities have grown in their influence, and this has just taken off. And it is our single major marketing effort of the year. And as I travel around the country, people see the American Century name. Everybody knows the brand as a result of this tournament. So it's turned out to be a great investment for us.
It's not just about investment and marketing for your company. This is also a massive fundraiser with regard to the charity it supports, the primary one. Can you take us through the story about why you've chosen what you've done with this tournament to benefit the charitable causes that you choose?
Thanks, Tom. That's a great question. I call ourselves a universe of one. Our founders, Jim and Virginia, did something almost nobody does while they're alive, and they gave away almost 100% of their net worth to set up a medical research organization to help people with cancer and other gene-based diseases. As part of that structure, we now direct 40% of our profits each and every year to medical research to find these cures and to make the world a better place for you, our kids, and our kids' kids. And over the last 20 some odd years, we've directed over $2.1 billion to medical research from this model.
It's crazy.
We're so happy to have you, and certainly very admirable cause to be talking about here. I do want to shift gears a little bit, though, because we had a mixed picture for the markets, but really underneath the surface, it was a very strong mirror rotation versus what we've been seeing play out here this year. Big tech under pressure, yields under pressure, small caps and less loved parts of the market rallying today. Is this a rotation that has legs?
Yeah, it's a great question. I mean, the thing about the market that's been going on forever, but this is the most anticipated recession that everybody's called for that's actually never developed. And part of the thing that's held back the interest rate cuts that everybody's looking forward to, of course, is a strong underlying market. That's why the Fed has been hesitant to cut rates and why the economy continues to move along quite strong. But it is starting to broaden out. The concentration we had in the Magnificent Seven has changed. In fact, if you look at the S&P, which is up about 18% year to date, but if you did it on an equal weighted basis, it's only up 4%. And this speaks to the concentration, and we are starting to see a little bit broadening out. We're seeing money move into some small caps and U.S. global small caps by some of the most informed institutional investors right now.
Jonathan, GDP accelerating in Europe and the Far East compared to the U.S. from here. When we talk about broadening out, how are you thinking about international stocks and even emerging markets?
Well, the United States, as we always tend to do, has led the way out of this troubled times from the pandemic, and we're still the most attractive market. But there's a lot of changes going on globally for sure, right? FX rates between Mexico and Japan is at like a 40-year low. The Japanese market's coming back. So we see lots of opportunity in a selective way, not broad-based investing, but there are absolutely real opportunities investing abroad right now.
And Jonathan, one of the things that we also want to talk about is the number of folks out there who may feel as though the upcoming election, which is a big focus for many folks out there, not just investors, but Main Street America as well, whether or not that's going to have any impact on the economy, the markets in general. I wonder if you might take us through what you think, and not predicting the election, but,
right,
but what you think the markets could do in whatever scenario analysis you guys are planning right now.
It's a great question, Dom. First of all, we kind of think it's a fool's errand to be investing based on the market outcome. It's really like three things you got to get right. You got to get the candidate, you got to get their ability to actually execute what they say they're going to do, and then on top of that, it can't be already priced into the market. But the best thing for the markets is always certainty, not uncertainty. And certainty could also be known as gridlock, and gridlock comes along best when you have a split government, call it a Republican president and a Democratic Congress. That creates a higher degree of certainty than when you have purely Democratic-controlled or purely Republican-controlled government. So I think the market would be best probably with a Republican president and a Democratic Congress.